Okay, so Jeff, I'm making you a panelist, and then I'm going to take control of the screen, so your audio should work here. Presenter. So here we are. Welcome to F.A.C.E, Jeff.
Thanks. Can you hear me, Dale?
I can, loud and clear, buddy. So there's your picture. Your reputation precedes you in here. One of our best traders, analysts, Nicola Duke, said she read your book. One of the best. It's a Bible for short-term trading. So you come in as a known entity. You've published many books, and here's some comments that people have made. Jim Cramer said, "Booyah" to you. Hit and Run Trading. I think that's what Nick was talking about. That's your book there.
Yeah, there are two of them: Hit and Run Trading, and then the sequel, Hit and Run Trading 2.
And you've made some big calls. Followed Jeff since 07, and his major contrarian calls have been spot on. And someone remembered March of 09 when everyone else was calling for the end of the world, when the S&Ps were trading at the sign of the beast, 666. Jeff was telling his readers the low was in. So really appreciate someone with your experience and having seen so many market cycles being with us today. You know what I'd like to start with though, Jeff, is from you to get from the beginning to where you are now, an author, a financial commentator, trader. Tell us about the beginning of your career and how you got involved in trading, you know, what it was like for you early on, and how you came to adopt GAN as one of your major tools for predicting markets.
So it's been a long, strange trip, and it's maybe very timely, to coin an expression, it may be very timely that we're doing that this week, which we'll touch on towards the end here. But how I got into this. So I've been a trader since 1982, but prior to that, I was in the skateboard business in its early days. I actually started Dogtown Skates, which some of you may have heard of.
Yeah, I've heard of it, yeah.
Anyway, skateboarding went out of favor in 1980, and I was looking for something. My dad ran a private hedge fund, and he suggested I become a broker to get a little experience. He wasn't going to take me on green. So I was hired by Drexel Burnham in July 1982.
Beverly Hills? The Drexel in Beverly Hills?
Beverly Hills, yep.
I know the office. I knew many guys that probably you worked with back then. Go ahead, buddy.
So, you know, as they say, July 1982, right before the market exploded in August, as they say, timing is everything.
Right.
And a president at Drexel named Dick Haft befriended me. He was a brilliant guy. And he had a way of looking at the market that really merged the left and right brain, art and classic literature and psychology with the market. And Richard used to teach standing room only extension classes on the market at nights at UCLA. Wow. I'll never forget him saying to me in July 82, "I'm so bullish my teeth are chattering." Well, the market exploded in August, and I saw that there's something about timing to this game. It's not just earnings and statistics. Haft used to love to tell the story in his classes about how he cut his teeth as a value investor when he was a student at Harvard. And he found a company that fit all his criteria. Every semester, he put more and more money into the stock. And for years, the stock flatlined. A few months before graduating, he sold the stock. Shortly there, you know the story is going to go shortly thereafter, it took off. Right. He had recognized the value, but it took years for Wall Street to recognize it.
That's one of my shortcomings. That's one of my shortcomings. So, you know, a lot of guys that have a lot of market insights and wisdom are usually early, aren't they?
That's true. I found that to be very true. I know I'm always early. Timing and time, I realized timing, you know, as the years went on, timing and time are everything. That was a big lesson. And that, along with the death and ultimate rebirth of skateboarding, if I'd stayed in it and kept the brand name, you know, who knows where I'd be with coining money from
Right.
Dogtown video games or clothing and ancillary type stuff. Anyway, skateboarding and its cycle and Richard Half's story about his value investment were my first introduction to the idea of cycles. Now, let me go a little further. Underpinning my arrival at Drexel and the way I started to look at the market was really my education at NYU, New York University. And I never took an economics course in my life. I didn't study economics there or business courses. I majored in film and literature. I was always very visually orientated.
Right.
I loved film, but I was really always more interested in still photography versus film. My thinking was that still photography captures a moment in time and essence. And I had a natural affinity at the same time for poetry and pursued writing poetry. So I could see that poetry was to long stories and novels as still photography was to film. They are psychological snapshots that are trying to kind of look around the corner like a chart, much like a trader will try to glean the future from the essence of a chart pattern. A little story. I remember being at a meeting with Milton's group. I was a newbie in the summer of 1982, before the market took off, and voicing my bullishness. They said, look, the economy was in the tank, interest rates are sky high. What kind of economics was I basing my bullishness on? Sheepishly, I told them I'd never taken an economics course and said, turn the chart of the Dow upside down. Would you be a buyer or seller? They could see that turning the chart upside down, the index looked like a sell, which, of course, in reality meant that it looked like a good buy.
That is hilarious. You know, when I had a friend, Jeff, that, you know, when I was on the wrong side of the market, he would tell me to turn my chart upside down.
It was really Richard Half that suggested that. So, in other words, they could relate to the idea of a fear of heights when they turned the chart of the Dow upside down, and it could the market could die of its own weight, but they couldn't see a catalyst that could propel it out of the quagmire in 1982.
Because they were completely into what the past was going to repeat in the present, and we'd been in a bear market range for what, Jeff, about 15 years between 720 and 1,000, something like that. And so most people in the business were used to eroding bear markets. So how could they see the bull coming? Because they, you know, for 20 years, they never saw one.
It's funny, the very first, my very first experience in the market, before I was hired at Drexel, I would go into a Shearson office in Beverly Hills, and there was one broker there.
Bill O'Hama.
What's that? No.
Okay.
I never met him. There was a broker there from Iran that had a lot of rich Iranian, Persian clientele, and you know they love to gamble on the futures. So I decided to. I was very bullish, based on what my mentor Richard Half was saying. I decided to buy some S&P futures, and my very first technical market leader at the time was Stan Weinstein.
Oh yes,
I'm sure you've heard of, the professional tape reader.
It's like a trip down memory. It's like a trip down memory lane with you.
No kidding. So the first 2 weeks, I had made, I think the Dow had gone from like 780 to 830, and I had made, I didn't put a lot of money into it, but I had made $25,000 in that 2 weeks. That was a lot of money back then, especially, for me. And I remember calling Weinstein's hotline. I think his hotline was only every Friday night at the time. And he said, well, we may have a little reaction here. And I said, oh, a little reaction, what's that? Well, the market went back down to 780, and I had a margin call for 15,000 and then another 15,000. So ironically enough, I learned later on that they say, if your first experience in futures is a losing one, count your lucky stars. and that was a really good lesson. But anyway, I hated the sell side at Drexel and soon left and went to work for my dad. He was a great tape reader. He knew absolutely nothing about technical analysis or charting. What my dad did drill into me was an important lesson that stocks don't move, they are moved. And it really made no sense to me that stocks got revalued from day to day and week to week in major ways. To me, it was obvious the game was more art than science. I could see that patterns of accumulation occurred before a stock was quote unquote released and driven higher, and vice versa, that patterns of distribution played out before a stock was driven lower. So I came to the conclusion that since fundamentals didn't satisfactorily account for the volatility and continuous short-term repricing swings in stocks, I was kind of drawn to the idea that the market was more, as I said, more art than science, and more of a psychological than a logical game where perceptions were reality. And we all know perceptions change like the wind. So the last part of this journey is how I got into GAN is kind of fascinating. In the mid-1980s, every Saturday, IBD, Investors Business Daily, they had a shop down in West LA, and every Saturday morning they had the new chart books came out with the updated prices.
Right.
And I used
so
to
you didn't use commodity perspective. You used IBD chart.
I used IBD, correct.
Okay.
And I used to drive over there and buy these charts every weekend. And they also sold books on the market. I read everything I could. One week I stopped in there and they discontinued selling books. And they were my source. You know, there was no Amazon. I asked if they knew where I could buy books on the market, and they recommended a ramshackle little bookshop upstairs from an auto body shop. I go over there that same afternoon. I couldn't believe it. I couldn't believe what they were sending me. And in the interim here, a broker had mentioned, I never heard the name WD GAN before, and he had mentioned the name to me and how square numbers affect the price of a stock. He said it's simple. Stock stops at 6 squared and 7 squared. Well, we all know it's not that easy.
Right.
So the first visit to that small bookshop was the beginning of an adventure studying the idiosyncrasies and synchronicities of the market. I walk in and I asked the owner of the store if he'd ever heard of WD GAN and the squaring of prices and if he had any books. His partner laughed. I was embarrassed. I said, "What's so funny?" And the partner went on to say, "You're talking to the expert in GAN." The guy's name was Jerry Bommering. I learned that this fellow used to be a professor at physics at USC, and he taught a course that met once a month for 12 months. I took the course, but unfortunately he died halfway through. But it did introduce me to the geometry of the markets and the belief that, as Carl Jung said, in all chaos, there is a cosmos. In all disorder, a secret order. So let's take a look at what I'm talking about and some of the slides.
Let me go to the GAN wheel first. What do you think?
Yeah, well, go to the GAN wheel. Let's go to the Tesla first. Here you go. That's the Dow. Let's go to the Tesla first if we can, Dale.
Okay, now the Tesla, I had up here somewhere.
I think this is it right there. You go.
That's the S&P.
This
is it. I couldn't get there because I didn't have a login for the Tesla report.
No, you just showed it. Go back one. I think you can grab it. It's right here in the bottom, right there.
This?
Yeah.
Okay. Show slideshow.
You got it.
Okay.
So in March this year, Tesla made a low after the market corrected at 243 and started turning up again. And in May, I projected that it would go to 384. And it's hard to see on these numbers, but 243 is here. These are all squares. This is the square of 9 number grid with the dates of the year surrounding it. And usually stocks or indices, any tradable item, work out in decrements of 90, 180, 270, and 360 degrees. That doesn't mean that obviously stocks can go up fivefold and tenfold, and the S&P has gone from 666 to 2,400. But it's the behavior once they've gone 360 degrees or down 360 degrees or 180 degrees. It's the behavior that tells the tale. So Tesla, anyway, it bottomed at 243, and on the chart it had broken out above 309, and I made a projection in May that would probably tag 384, which is 2 complete revolutions, or 2 of these whole squares. So this is a big square here. 2 of these squares up, 2 rungs up from 243 ties to 384. So in June, Tesla hit 386, and I got a couple of emails. People want, people want this to be a science, and they go, what do you say now? Tesla just cut through 384 like a knife through cheesecake. I said, first of all, the expression is a knife through butter. And second of all, 2 points on a $380 stock is not.
Yeah, can you clean it up a little bit, Jeff? I mean, we hear this too. Oh, you called an area and it went through it by a few pips. So
yeah, a few pips. So anyway, the rest is, as they say, is history. Tesla closed that day at, I think, 383.50 or so. And in 8 days, it was back to the low 300s.
Nice. Beautiful.
So Gann used to say that all major highs and lows are harmonics of prior highs and lows. And this is according and in keeping with what he called his law of vibration. So they're harmonics of each other, and they relate. And if you want to go to the next slide on the square of 9 on the S&P, show you something that's really timely and I think fascinating. Let me show you an example of how. Go back one.
Oh,
you had it up there. There you go.
okay.
So let's take a look here at how the high in 1929, which was 386, that's right here.
Oh, I see it.
Okay, 386 right here.
Right.
Ties to the crash in 1987 and to the orthodox or primary high in July, in fact, July 1920 of 2007. The market made a high in July 2007, tumbled, and miraculously, a la the Fed, walked back up to make a marginal new high by, I think, around 20 points into October. 90 degrees past the October high. So what's interesting is that the Dow high in 1929 was 386 and aligns with this date, July 20th. So that's why Gann's book is called Tunnel Through the Air, because these price and time vibrations go forwards and backwards. Prior important major highs and lows relate to future highs and lows. And you can see that 386 is 90 degrees. This is a 90-degree angle here. Square October 19th, which is the date of the crash, of course, in 1987.
Nice.
So what I didn't want to put too many lines on this, but if you move it up back just a little, move it up so you can see the top of the chart, the top of the wheel. Here you go. Great. In 2002, the S&P low, I'm trying to see it here, is, here we go, 786, right here, which also ties to early July, ties to the month of July. The idea is that time points to price and price points to time. Time and price marry each other. You get what Gann called a balancing out or a squaring out of time and price. So 90 degrees square 768 was early October. And that's where the 2002 bottom was, right at 768 on October 9th in 2002. And what's fascinating is that 5 years later, in 2007, 6 rungs up from 768. I know it's very hard to see this on here, but I do offer this wheel for sale, and it's much more important. And I know there's some digital versions of this wheel, but it's much more important. Just like Gann used to draw. Of course, they didn't have computers at the time, but Gann used to draw his charts by hand. And one of my heroes in technical analysis, Justin Mamus, always drew his charts out by hand, because just the feel of watching.
NLP. It's NLP. Anything that you put on paper leaves a bigger impression in your mind.
It really becomes something indelible.
Right.
Anyway, so 6 rungs up, or 6 full revolutions of 360 degrees, was 1576. And I don't want to get too esoteric, but that's when it occurred to me, Gann, he always used the word square outs. He never used the word cube. But one of the courses and DVDs I did, I think 2005, was a study of all the swings in the S&P from 1941. And in doing so, I noticed how many 540 degree swings there were in both time and price. I said, well, what is this 540 degrees? And I realized, well, in a true square is a cube, there are 6 angles of 90 degrees. 90 times 6, 540. So a cube. So I reckoned that 6 full cubes of 360 degrees up from 768 to 1576 could be an important top. And sure enough, 1576 was the high in 2007. So when you see this geometry work, despite hundreds of thousands of traders and billions of dollars, that there's some kind of innate underlying natural law that may be at work here, it really becomes something fascinating to me.
You know what, Jeff? You know what's fascinating is all the different historical eras all these turns came at, from the day, when Gann was trading. He was doing it off a tape like your dad, only your dad's was electronic. And then, we always had open outcry, and then that went away. And they say the market's changed because, now we have algos and black boxes and all of this type of real high-speed trading. And yet this transcends all the changes in the market's nature, even its physical structure of executing prices, which is, to me, fascinating.
Well, that's the thing. Ultimately, we're going to get to see who's bigger, Janet Yellen or Mother Nature.
Great one. Yeah.
Okay.
Okay.
So
you want to go?
Go ahead, Dale.
You want to go to that slide?
Sure. Let's go to that. To the there we go. So let's look at a way of what we're looking at now in the market. This is an S&P weekly from June that I did for my my report for subscribers. Let's look at the symmetry. The bear market from 07 to 09 was 910 points. That was the range of the bear. Added to the 1576 top from 207 is 2486. We just hit 2478 yesterday. We also have a measured move from the 1810, the last major swing low that creates a trend line here, from 1810 to the, I I think it's the 2194 top in 2016 is 384 points. It was just yesterday, last night, when I was looking at this chart again for you, that kind of popped out that, well, that 384 points is awfully familiar. It kind of rhymed with the 386 points of the Dow high in 29. But anyway, so you have a measured move here from 384 points up to 2194, and then to the pre-election low for the Trump rally at 2084 S&P, another 384 points, ties to 2468.
Yeah. Did Carl Icahn, was he getting your letter when he left the victory party and went and bought futures limit down that night?
Well, if he is, he's not paying for it.
Great one, man.
So go back. I'll show you one last thing here, which ties to this 2480, 2470, 24. You can go back to that square 9 that related to on the market on the to the other one. You got it. So again, I'm sorry, this is we can't blow this up, but 666. Let me try to find it right here. Is right here. Okay. You got it. 666 is, here's 660. Trying to find it here. 345. Here we go. 666, 667. Now, I didn't draw this relationship, but if you were to do the same thing I did on the left of the chart, 386 being square October 19th, 666 is 90 degrees square March 6th. So in other words, I take a line down from the center through 666 and a right angle, and it hits March 6th. So this is a little too much to be happenstance. The same way that the S&P found low in 2002, a la 768 squaring early October, and the 07 high with 1576 squaring early October showed up again at the 09 low with March 6th squaring 666. Now, I thought it was a low, and I said so in the report, but honestly, I thought it was probably a low for maybe 6 months, that we were going to repeat the 6-month rally after the 29 crash because it was such a disaster.
Right.
And the moral of the story is, when the market starts behaving differently, you want to listen. It rallied for more than 6 months. But what's really interesting here, where we are at this point in time, and my physical square of 9 wheel goes up to the 3000s. This digital one only goes up to below 2000. But anyway, trust me when I say that 6 squares up from 666, 6 of these rungs up, ties to 1430. So we got to 1430, I think, in 2012, again, coming up off the low. And I said, oh, great, this is going to be a short, thinking the same thing was going to happen when we ran up 6 squares from the 02 low into 07.
Right.
And the market reacted a little, but ultimately blew through 1430 and kept going. And if you look at your charts, we had a persistent run once the S&P recaptured 1430 up to, you can see here's around 1430 right here. And you had a really persistent, clean bull run. And then it occurred to me a couple of years ago that I had been looking at it ass backwards. In other words, 1430, which is right here, was the pre-crash pivot high in 08. And so what did the market do? It waterfalled 6 squares, just like it had gone up 6 squares, and from 202 to 207, it waterfalled 6 squares down from 1430 to 666. It had been there, done that. So the moral to the story is that what's 6 squares up now from 1430? It's 2480. Yesterday, the Dow hit 2478. So it's going to be really interesting to see what happens here.
Let me ask you this, Jeff. If this turns out to be a major turning point based on your work, what would be the minimum severity of the decline, especially if we break the trend line and you get confirmation of the uptrend being broken? Because to me, it looks like a huge rising wedge.
Right.
Which, wedges, like the rule is that I learned from Edwards and McGee, and I'm sure you read that book back then too, is 100%. That wedges retrace 100%. But what would be like a minimum expectation if we roll over from these scan numbers that you're talking about now?
Well, not even using the Gann wheel, I would say that in a bull market, you could certainly want to look at 360 degrees down. But given that we haven't had a 20% correction in 6 years,
Right.
That seems like it would be on the table. But let's assume that this was a daily chart, not even a weekly chart. And it was a daily chart encompassing, a couple of years maybe.
Right.
And even in a normal bullish correction, a pullback to these prior highs arguably would be, presumptively that would, say again?
These right here,
Yes.
2134.
Yeah,
about
in the
2100s.
2100s,
Okay.
exactly. Would be the normal expectation, even
Okay.
within the context of a bull market. One could say that even a pullback, if this was now a daily chart of a stock, let's say it was
1810.
well, I'm talking about over a year to the prior highs of 1576 would even be doable. The problem,
and you know what? I think that's 38% back of the whole advance, or halfway back.
And they say that that's a normal retracement. The problem is that if you break this rising 3-point trend line from 09 and February 2016, and then the pre-election lows, you're going to break a 3-point trend line for what I call a rule of 4 sell, and those usually give you fast moves. So I would expect that if you break 2280-ish, which is where this number ties right here,
Right.
that the normal expectation would be certainly a test of the low 1800s.
What a great interview, Jeff.
I appreciate it.
Did you enjoy it? I know I did. I know our community did, and your explanations are clear as a bell. And what an interesting journey you've had, and how blessed you were to have a dad to be your mentor instead of what people have to go through nowadays on the internet.
That's very true. Yeah,
with all the charlatans out there and everything. So, I'm happy to call you if you accept my Trading Warrior brother, and I hope all your forecasts come true. And I recommend people follow you at the minimum on Twitter and perhaps subscribe. You have some deals. I think I was showing some of the deals that you have here.
T3live.com. They publish my report. Let me just add one thing before we hop, if I may.
Go ahead, buddy.
The square of 9 wheel, I took me years to fabricate, and I do offer it for sale. And of course, it comes along with the phone consultation on how to use. But for those of you who are really Gann students and aficionados, the square of 9 wheel does a great job of unlocking the codes to Gann's master time factor, which are in his novel, The Tunnel Through the Air. So any of those of you that are interested in exploring that further, contact me at Jeffrey Cooper at earthlink.net, and we can get into a dialogue about it and how to obtain the square 9 wheel.
Have a great weekend, Jeffrey. Thank you
Thanks for
so
your
much. That's my middle name, Jeff. So enjoy your weekend in paradise. Jeff lives in one of the coolest places in California. So pleasure meeting you, Jeff. I'm glad to know you.
Likewise. Let's stay in touch.
Okay, everyone, that was Jeff Cooper. You can follow him at Jeff Cooper Live. You could email him at his Earthlink address. And there's a veteran. Okay, I want to thank everyone for their hard work. Hope everyone had a good week and enjoy your weekend. See everyone on Monday, God willing. And remember, most of all, don't just count your pips, count your blessings. And I'll see everyone Monday. Adios. See you guys.